I'm Jason Stipp from Morningstar, and welcome to the Friday Five. Five stats from the market and the stories behind them. Joining me, as always, with the numbers is Morningstar Markets Editor Jeremy Glazer. Jeremy, thanks for being here.
Glad to be here.
So what do you have for the Friday Five this week?
Well, we're going to look at 2%, 88,000, minus 50%, 20 million, and finally 45%.
2% is the inflation rate that Japan is hoping to target. They're taking some pretty extraordinary measures to do that. What's your take?
This really is an incredibly aggressive program that the Bank of Japan is going to be embarking on. Before we kind of knew that they were going to start targeting, a 2% inflation rate, that already helped the Japanese stock market a little bit. That's being driven by the Prime Minister Abe, who's coming back into power. He's bringing with him a new central bank governor who has a lot more unconventional ideas than the previous governor had. And after he led his first meeting in the central bank, we got some more details on how they're going to hit that 2% target. They're going to do it by doubling the monetary base by 2015 to get to that level and to get rid of the deflation that has really plagued the country for decades now. They're going to be buying about 1% worth of GDP of Japanese government bonds, according to Barclays, every single month. That compares to about 0.5% that the Federal Reserve is buying of U.S. government bonds, to give you a sense of the scale of this program versus QE3. So with this massive amount of new money being printed, the question is, will it actually get that inflationary effect? And we just don't know yet. If this ends up just being held in banks and it doesn't really get out into the economy, there's no demand for that money, we might not see that inflation pick up exactly how they hope it's going to. And it's going to be really a lesson in psychology. Can the bank convince ordinary Japanese that there is going to be inflation? They do need to kind of spend now, or they're going to see their purchasing power really diminish over time, get that private spending up, can it overcome some of the demographic, and other issues that Japan is having right now? We just don't know, but this is really an aggressive plan. It'll be interesting to watch to see how effective it is.
Back here at home, despite some continued Fed stimulus measures, we only got 88,000 jobs added to the economy in March. Definitely a disappointing report. What's your take?
Yeah, disappointed, I think, is the word for it. We already thought that March was going to be a little bit weaker than February. February looked exceptionally good. There's some other factors that were going to be weighing against it, but it was even worse than the consensus that already had been, taken down a notch. And I think that this is not a reason to panic yet. It's the kind of case where one data point doesn't make a trend necessarily. It's just like February's good numbers didn't mean that all of a sudden we're on this much higher trajectory for job growth. This doesn't mean necessarily we're on a much lower trajectory yet. We've had some kind of spring slumps over the last couple years where after what looked like pretty good data, the first part of the year it started to get a little bit weak again before picking up. I don't know if that's a trend that we're going to see happen again this year, but it's probably too early to totally freak out about it, but it definitely is not a good sign.
50% is the decline in HP shares over a certain period of time, maybe related to some board decisions or some board activities that didn't really pan out. There was some news on that this week.
The HP board has really been a mess for some time now. It is kind of surprising that there's not a Bravo show, the real board members of HP yet, because they have made a lot of very controversial decisions. There seems to be a lot of infighting. We had the spying scandal. We had the issues with Mark Hurd getting fired. And, we look now at Raymond Lane, who was the most recent chairman and executive chairman. And, for his tenure, we also saw some problems. The shares drop over 50% over his tenure, as you mentioned earlier. You had the Autonomy acquisition, which really appeared to be a disaster almost from day one that it closed, that it just was really way over paying for it. And then we saw, a pretty substantial reduction in a substantial write-down of the cost there. And I think for HP shareholders, they really have to hope that the board is able to get its act together and get good stewardship. There's a lot of really excellent assets within that company and a lot of potential there, but you kind of need to have, that good stewardship from the board level in order to realize that. I think Meg Whitman is beginning to do a good job, beginning to make the decisions that are needed to kind of get back on track. And, the performance has started to get a little bit better very recently, but this is a board story and a saga that seems that it just won't end.
If you had 20 million users of a phone, it might sound like a big number, but not so big to Mark Zuckerberg, who said that's maybe how many people would use a Facebook phone. They decided to take a slightly different route for a mobile strategy.
They did, and it's a strategy that makes a lot of sense for them. Instead of designing their own phone and having their own piece of hardware, they're going to develop an app called Facebook Home that will live on a number of Android phones. And the reason that this makes sense for them is it kind of lets them not lock into any one ecosystem, not lock into any one piece of hardware. hardware, it means that they get to lock their users into Facebook. That if you really enjoy using Facebook Home on Android, but then let's say there's a big move to Windows Phone, let's say, Facebook said that there's a chance that they can port it there. And they said that although the iOS rules make it difficult, they would like to have a deeper app for Apple. And if they feel like they can get their users and that they kind of own their users, that people want to see Facebook when they first turn on their phone, that will help them kind of navigate the mobile and smartphone world as it continues to proliferate. It will help in tablets as those continue to become more popular across the world and makes them more relevant to their users. This seems like a much better idea than trying to bet the entire house on one particular phone and hope that enough people sign up for it.
45% is the amount of Verizon Wireless that Verizon does not own. They would like to get their hands on it. There may be some more news or some different pathways to that, maybe or maybe not a good idea?
Yeah, we'll see. This week there was a rumor that Verizon in the United States is going to team up with AT&T to take out Vodafone. And Vodafone, of course, owns that 45% of Verizon Wireless that Verizon doesn't own, and Verizon would get that stake, and then AT&T would then take over Vodafone's European and other operations as a way for them to expand as they have really felt like they've hit their growth limit here in the United States. And this is a deal that our telecom analyst, Mike Hodel, is not terribly excited about if it actually happens. And the reason is probably valuation. The only reason that Vodafone will agree to this is if they get a really rich valuation on their company. They feel like they can continue to operate the business as is, buy back shares and create value that way. They don't feel that they need to do a deal and they need to be kind of forced into it. And when you pay too much for an acquisition, it's extremely difficult to make it work. The synergies, particularly for AT&T, owning a huge European network all of a sudden, might not be all that great. And if you're paying too much for it, it's probably not going to work out for shareholders. Verizon would love to own all of Verizon Wireless, but again, you pay too much for it. It's hard for it to make a lot of sense. So maybe the financing for this won't come through. The parties are denying that this is really happening. It could be that this was just a rumor, but it definitely is something that investors and companies need to watch out for because it certainly might not be the kind of value creator that maybe some of the bankers are pitching it as.
All right, well, some ups and downs, ins and outs in the data this week, but thanks for walking us through the numbers again.
Thanks, Jason.
From Morningstar, I'm Jason Stipp. Thanks for watching.